More than 2,000 financial advisors, portfolio managers, and investors log on every morning at 7 a.m. Eastern Time to see what's called the Sevens Report. Comes out every weekday at 7 a.m. and flags what could be the biggest market events for the day ahead. Tom Essaye is the man behind the Sevens Report curtain, and he also makes predictions. Give us your prediction about the S&P beyond the fact that it looks like it's going to close at yet another record high right now.
Hi, Liz. Thank you very much for having me on again. We're looking at two things that if they happen, we're going to be talking about S&P 500 above 3,000. The first is a weaker dollar. The second is a U.S. China trade deal, and there's progress on both fronts, which is why stocks are rallying.
What kind of progress are you hearing about? Because we just heard from the president, and while he said his usual, we should have a good relationship with China, he also said, I had to do something about an unbelievably sketchy landscape and an uneven landscape when it comes to the trade deal with China, that it's benefiting China and not the United States. He could dig his heels in here.
Well, he's right. There is sort of an unbalanced relationship. But underneath the surface, there is progress. Last week, we had low-level talks between the U.S. and China. And then on Monday of this week, China did something. They stabilized their currency. That could be an olive branch to the United States because it shows China is not going to devalue their currency to offset the negative of tariffs. These are little signs, but they are little signs of progress nonetheless.
I'm glad you brought up the yuan because it was at a critical level. It started to fall and weaken and weaken and weaken. And what do you see? It was close to 7, I believe. And then they did intervene to stabilize that. And that's been the biggest complaint. Their weak currency makes their products so much cheaper for Americans, and our strong dollar makes our products more expensive. So we had this trade imbalance. Let's say we do get a deal. How do people invest on that prospect?
You want to invest in cyclicals, which have not outperformed for years. And I'm talking about industrials, things like the Dow. XLI is a good ETF. Banks will do well. KRE, we've talked about that on the show before. That's done well. And then also retail. Remember when Amazon was going to kill retail? Well, retail's done very well this year because the U.S. consumer is flush. Those are three sectors that should outperform if we get a U.S. China trade deal.
We want to talk a little bit, and I know it's kind of wonky, but people should know that copper is a good predictor of what's happening in China. When it is weak, boy, that indicates that China is shutting down its growth, and the government tinkers with all of this. It's not necessarily the consumer thinking, oh, maybe we're going to have a trade war. We should hold on to our pocketbooks and preserve some dry powder here. Where do you see copper, and what can our viewers infer from that when it comes to investing around a possibility?
So those of us in the business call, and I know you know this, we call it Dr. Copper because we say yes. Copper has a PhD in economics because there isn't global economic growth without the use of copper. Copper has been very weak lately. It forecasted the volatility we saw a few weeks ago. It is trying to stabilize now. Remember, China is actively trying to stimulate their economy right now. It takes time for that to occur, but in a few months it should start to take hold.